I hope you're doing well. In today's video, we will continue with our series of using price action to analyze indexes and then eventually stocks. The idea is to use different charts in real-time markets to learn different things because price action is visual and discretionary in nature. It is very difficult to code the elements of price action into a screener, and therefore going through many charts is the most efficient way of improving price action. And having traders of different experiences and different skill sets clarify what they're seeing in the chart greatly improves one's own ability to see the chart in the future, because you have a certain precedence of how to spot things. So let's dive straight into the chart. And the chart that I have, the sector of the focus for today is the pharma index, and I have set the time frame as usual on the monthly. And on this website we have data from 2011, and from 2011 all the way, we can see that till 2015 there is a very good strong rally into this index. I will mark this in blue color. We can see that the index actually moved up from near 4,500 levels to almost 14,000 levels. So that is a 3x move that is visible here within 3 years time. So it's a very strong move, because a 3x move at the index level is absolutely huge. Of course, after 2015 the index witnessed a consolidation for a very very long time. Means if we can just connect this, we will see that I think this should be a relevant point. We can see that the index actually did witness a consolidation for a pretty long time, and then finally COVID looks like where the index broke out from the downtrend. I'll just move this image here, and it is at this point in COVID that it looks like the index had actually changed its trend. And yes, so some people could wonder if this is a flag pattern or not. And like we discussed in our earlier example, a flag is only applicable if there are less than 21 candles. A preferred number would be 7 to 10. This is simply too many candles. So this is a breakout of a downtrend from this time frame, but it is not a pattern. This is not a pattern. And obviously after the breakout, the security tested its previous high. And sorry about that. Security tested its previous high, and obviously this is the zone where it consolidated. We can see that after testing its previous high, it formed a lower top lower bottom fashion. If we just select, you will see a clear W pattern here. If I can just select a trend line, you will see this downward movement here. I'll have to select this multiple times. Then this followed up with another down move, and this movement here. So if I zoom into this price action, you will see that at a critical resistance it gets rejected, comes down, forms a W pattern, and then there is another breakout. And of course this rejection is happening after an all-time high. So the price action became there was a bullish pattern that was formed, which eventually broke out, and yeah, the security did move higher. So I'll just remove these lines now that we have had a good look at them, and just see what's going on in the current scenario of the index, and see if we get certain cues to take certain positions in the market. So after 2023, we can see that this is during the Russian-Ukraine crisis. We can see that the index clearly broke out and created a new life high at almost 24,000 levels. Nearly 24,000 levels is the new life high. And since 24,000, then we can see the pullback that sort of started in October 24, and it has made lows of approximately 19,000 levels. So I'll just mark a blue line here, and I'll mark a blue line here. So now we know that the index currently is trading in between this low, and if I use the trend line again, and this time I use a darker line, you will see that if I mark this here, followed up with another trend line here, so this is extending from this place here, and here. Now if I just zoom into this, If you just focus on the black line, you will see that this is looking like the letter M, and we know that M is a top reversal pattern, which would mean that obviously this is in a structural uptrend. This is clearly in a structural uptrend. It's created a new life high just 6 months ago, and it has not really created a significant low just as yet. So this structural uptrend is intact, but the bearish pattern will only happen if the M pattern is broken. So we know that this low is here at 19,100. If this low is ever broken, then we can see that there is an M pattern, and it will give it a 5,000 point target, right? Because it's coming from 24,000 all the way to 19,000. So it will give it another 5,000 point target, and that will be straight at 14,000. So which means if the M pattern is indeed to be formed, then there will be a structural target which takes it right back here. And when this will happen, then there will obviously be known as what is known as a harmonic pattern. Like you have those bat and crab and so many harmonic patterns which will kick in, and that will likely send the index right back here, somewhere around here. But these are price actions for later. They have not yet formed. What is critical to see is that if you go long on the market for any particular reason, there is absolutely no justification to be long on this market at any level below 19,000. I mean, there is simply no justification. You can have some buffer stop losses of 500 points. Some people could have it of 1,000 points. Maybe you want to be very sure and take it to 18,000, but there is no reason to be long on this market if an M pattern actually gets created. In other words, we always know that we use the monthly time frames to assess the trend, and we obviously try to determine in the same time frame where the trend would structurally end. And I think that the formation of an M pattern would structurally end this trend, because it would be a higher top, lower top, and then finally a lower bottom formation. So we have this understanding on the monthly charts. We can see that the general bias on the market has to be long. It has to be long because of the previous high, because an M pattern can get created. It is obviously not yet created. It can get created, and if it gets created, that is where the long positions will close. So this is the gist that we got from the monthly charts. We just move on to a shorter time frame, and now we will just have a look at the weekly charts here. All right, and in the weekly charts, what we are basically looking for is a sort of a pattern, a bullish pattern, if we can find, because the direction that is coming to us from the monthly is a long direction. And when we try to look for patterns, obviously what we want to do is we want to connect the previous highs, or we want to connect the previous lows. So for example, if I just take this ray here and I connect these highs, or maybe I'll connect these highs here, right? And maybe I'll just make this dotted. Okay, it's not coming this way, and I'll darken it a bit, right? And also maybe make it red color. Okay, so just look at the orange line. I can remove this. Is obviously this lower blue line will be the target on the downside if this 19,000 were to ever break. But for now, if you look at this, what we actually get is obviously this is a shoulder. This here is the head, and it has not yet formed the inverted head and shoulder. It's not yet completed it, but we can be very, very sure that if it breaks out, I mean above the orange line, but again, you'll have to give it some buffer, maybe 100 points, 500 points, 1,000 points, depending on trader to trader. But if it breaks out, and if it comes anywhere around these levels, like above this orange line in the future, say for example here, I'll just mark this with the same orange color, it will force a long into the market. It will force you to go long, because we have a structurally bullish stock on the monthly giving an inverted head and shoulder breakout on the weekly. And I mean, it's very difficult to not be long here. We are talking about a pattern target. I mean, we are talking about patterns, and obviously we will see that this neckline, I mean, we can see that the neckline is formed at a high of say 24,000, or not 24,000, but let's say 23,850 or 23. Let's just assume 23,500 as a value. Let's just assume the low, a reasonable low of 19,500. So there should be a 4,000 point minimum target on this stock if this were to ever reach. By stock, I mean the index. Of course, currently the index has not reached there, but if it reaches there, which means a 3 or a 4% breakout on Nifty Pharma this week, next week, couple of weeks later, will set it up for a 5,000 point target. Now we have to see this in tandem with the various other indexes also. We have already seen that the saucer pattern breakout in the Nifty auto, we have analyzed the chart a few days earlier, also gave it approximately a 5,000 point target on the same 20,000 24,000 level. This one is forming an inverted head and shoulders, which will also give it a 5,000 point target. We had analyzed Nifty IT. IT did not seem to form any patterns, but we saw a hammer candlestick on the monthly, which is a bullish reversal pattern, but it doesn't give it an upside target. It just caps the downside. It just defines the downside. So obviously Nifty IT became a lesser preferred one. Nifty Auto had given the breakout while we were analyzing the chart. Nifty Pharma still hasn't given that breakout. It is getting ready, it looks like it's getting ready to give the breakout. Any pattern traders trades will only initiate after the breakout has happened. So of course we can see that there is a neckline and a potential inverted head and shoulders in the direction of the larger trend, which will force longs. And when we are in this, we obviously look at it more closely. We will see that this is a engulfing candle. This big red candle engulfed the previous spinning top, engulfed the candle prior to this. It gave another red candle closing, which is a continuation on the downside, but you will see the formation of a tweezer bottom. A tweezer bottom is when two candles form the exact same low. For example, the low of this candle is 21,325.20 and this one is 21,324.20. So it's almost the exact same low, and therefore this becomes a tweezer bottom. And then there's another green candle which sort of confirms the tweezer bottom. In other words, in the extreme short term, we are looking at a range like this. This is the extreme short term range. This is where we are seeing the price in between these yellow lines, 22,820, 21,320. This is the range in the extreme short term, which is coming on grounds of the candlesticks. And then if we look at the daily, so within the daily, we will see that we have marked the range, we have marked the breakout zones. We can see that in the short term, this looks like a strong support, 21,320. I think this sector could, on the daily, of course, it has temporarily breached this with a doji, but any gap up will it looks like there is a reasonable risk reward in trying to attempt this index at say the current levels. The trade is not yet given any kind of a bullish confirmation, but what we are seeing is the same tweezer bottoms here on the daily. This is of course the evening star that happened on the daily. These are tweezer bottoms that happened, and they happened at a pretty strong range. So I think it's reasonable to expect that this 21,320 low can hold. It really can hold. It's a reasonably strong zone. And a confirmation or a trade can be taken with this as a stop loss. So which means if you're entering at 21, it's 820 approximately. So you would again plan a minimum 500 point SL. And we must understand that this dotted yellow line and this yellow line has not yet broken out. So this will be the first resistance point. So if you're coming at 21,820, you have to book at 21,420. You will have to book partially for sure, because till the pattern is not created, you don't expect it will get created. Even though we are seeing confluence from other indexes, etc., but when we analyze a chart by itself, we cannot assume that it will get created. So we'll assume that the low could get defended because of the tweezer bottom. And if in the process of defending those lows, the index does manage to take out these orange lines, I think this will become one of the most bullish sectors on the index. It'll give an inverted head and shoulder after a long time, and we have seen that this index is capable of sprinting. Because in 2 years we have seen that it has the potential of giving 3x returns, and that's the reason why we want to try. So we must see this. Again, I'll just come back. The whole point of discussing this was that we must understand that when markets decide to give you money, they are going to give you 100, 200, 300% returns in a couple of years. That is if they decide to give you money. If they decide to consolidate, they could consolidate for almost a decade and not give you anything in return. So when we come, and then when the market creates certain bullish patterns, we must take them seriously. So where the market potential is to give 100, 200, 300% returns, we should not be penny wise pound foolish and just try to bottom pick every 10 points or 100 points in the market. If we have a bigger vision, and if we have a bigger direction that we are taking out, we should wait for the confirmation on the shorter time frame. For example, on the extreme shorter time frame, if we are seeing a doji, we want a clear green closing the next day. and whenever you're entering, we have already used price action to mark our defensive zones. I'm sorry. Another possible trade could be that if someone says they'll ride the 23,000 call and the 21,000 put, on theory that's a good trade. In theory that's a good trade, but I don't believe in such trades. Firstly, you will not have any liquidity on those call and put options. Secondly, you will, by writing a call option, you will be betting against the structurally bullish trend that is there in this particular index. And yes, you can use the put option to write, but provided you get liquidity. And what I have experienced is that, for example, if you look at USD INR today, so after the exchange decided that there is too much of speculation happening in the currency market, they forced the individuals to have physical delivery of the US dollar before taking trades in the USD INR market. And with that decision, essentially the currency market is killed in India with that single decision. Because even if there is a company, let's say for example there is a company like Bajaj Auto or Serum Institute of India or some major exporter, even if they have hundreds and hundreds of thousands of US dollars in cash reserves, even if they have that, in order to hedge it, they need a counterparty. And that counterparty typically is the speculator. You cannot hedge against another hedger. You need to hedge against a speculator. And that's actually what the speculators offer in the market. They offer the hedgers and the investors the tools to hedge and invest, actually, because otherwise there are simply no participation in the market. So basically what happens is that the exchange has taken certain decisions which kill certain segments, and one of those segments is obviously our FNO segment also. The whole point of analyzing all of this is basically to share that the whole point of analysis of this entire work is basically to ensure that our assessment remains constant for some time, and we don't have to keep repeating this exercise. So while on theory you can write down the put option, but in reality you will not get the liquidity, and the reality is that our regulators have an unfavorable view of FNO. We might as well as start making plans of extremely long trades and start analyzing the market also like that, because it should not be that in order to capture a few points in the intraday, we just simply miss out on the bigger picture if it ever unfolds in front of us. So I hope that we have studied and learnt a few things on price action, and if this video is of interest to you, do mention it in the comments. I would also like to add to the Upsurge students who are there in my course that on the 18th of September we will be meeting online, and hopefully we can discuss all of your system related queries, all of your doubts in person. And I'm really looking forward to that meeting. I just like I mentioned that I have this huge backlog of communication that was pending, so that's why Upsurge and we just I said that instead of me replying to WhatsApp messages, simply because I can't anymore, it is best that we just schedule a meeting and make it like a scheduled thing, a predictable, repeatable kind of an exercise. And the whole intention is that sometime maybe 3 months, 6 months later, we will have what is known as a meeting, like a physical offline meeting, wherein once in every 6 months to a year we should meet in order to just discuss a few key points. But of course it is important that you and I are speaking the same language, and therefore I suggest that you read up on all the content that is there, and practice your trades with controlled position sizes, so you keep improving and getting better. I hope you have a good weekend. Thank you for your time. Take care.